Hello, hello, ladies and gentlemen. Welcome to the 98th edition of the Business and Banking Dialogue. Along with you, we have traveled so far. We have reached the 98th, and we are, just on the threshold of the 100th edition of Business and Banking Dialogue. Thank you very much for your participation and encouragement. I'm KK, your host and moderator of today's show. You can participate in this discussion through the EPS channel and social media like YouTube, Facebook, Twitter, and LinkedIn. And don't forget giving us a thumbs up and using the social media channels. Today is a special day, like every day, but today is more special. Today, we have with us as our guest, the ex-Deputy Governor of RBI, Mr. HR Khan. So I will briefly give you his profile for people who don't know him. Mr. Harun Rashid Khan, popularly called as Mr. HR Khan, retired as the senior-most Deputy Governor of the Reserve Bank of India in 2016, nearly after 38 years of service with the central bank. At RBI, he handled diverse areas and spearheaded major projects relating to financial markets, foreign exchange management, external investments, banking regulations, supervision, payment and settlement systems, and financial inclusion. So today, our topic of discussion is exactly on that, the financial inclusion, the digital financial inclusion, post-pandemic opportunities and options. This is what we are talking to him today. And he has been instrumental in the central bank about the financial inclusion. So you read about him. Besides, he was also the member of the committees of digital payments set up by the Government of India and the RBI. He currently chairs the Corporate Bond and Securitization Advisory Committee of the Securities Market Regulator, SEBI. Welcome, Mr. Khan, to this Business and Banking Dialogue show. So good evening and welcome. Thank you, sir. Thank you. So there are three key components of any such digital financial services. A digital transactional platform, retail agents, and the use by customers and agents of a device, most commonly a mobile phone, to transact via the platform. Using these three components, digital financial inclusion services can be provided and availed for the excluded and underserved population. So my first this one to you is given that the objectives of the government and the of the economy is that given that enhancing economic growth, narrowing income inequalities, and reducing poverty are the key objectives of our government. Keeping this in mind, how can we recalibrate our agenda of digital financial inclusion, and B, redesign metrics to measure the economic impact of digital financial inclusion, or to quantify the financial inclusion outcomes, the results of the financial outcomes?
Thank you, Mr. Krishna Kumar, and thank you, EPS, for hosting this webinar, Banking and Business Dialogue. And I am impressed by your unrelenting pursuit to expand the envelope in terms of sharing ideas. And we are today in the 98th edition, and soon we'll be reaching the 100th edition, which I am looking forward to. As you rightly started off with this digital financial inclusion in the post-pandemic context, let me just very briefly touch upon what is the context, why this particular subject assumes criticality. This has been a severe economic shock. This pandemic has, and in fact, the pandemic is still playing out. And yesterday's head count was 97,000 per day. I don't know today's head count. I think we're racing towards 1 lakh per day. And we had seen severest forms of lockdown following the health crisis, then start and stop activities which has affected the economy. And we saw the last quarter GDP data of contraction by 24%. And the various estimates of GDP contracting anything between 7 to 15% in this year being talked about. In fact, there was earlier estimate of IMF that it may contract by 4.5%. that has been overtaken by still more pessimistic estimates. The short point here is in this context, the financial inclusion more so through digital means assumes significance because, for example, one estimate indicates any 5% dip in the growth, 11 to 12 crore people will again get into the poverty trap. Well, last few decades, we have achieved substantial progress in terms of pushing people up from the poverty line. I think there is a risk of re-exclusion now in terms of people getting into the poverty. There are huge livelihood issues because of loss of job and loss of income. And so I think that in that context, digital financial inclusion assumes importance. So how do we provide digital financial services in a meaningful way, which will, I would say, encompass 4 or 5 elements, and they will provide the metrics for your assessment, impact assessment, or evaluation. What are they? Is in terms of convenience. So how do they provide convenience of people accessing digital financial services digitally? Now we are in a phase where we want paperless, personless, contactless scenario. And how do we handle that? And you know, the traditional financial inclusion initiatives have been highly intensive and contact-oriented, person-oriented, meeting-oriented. So now there is a paradigm shift. So we have to move it to that which is contactless, paperless, and meetingless. So that is one. So how do we build that convenience in the new setup? Second is in terms of cost. So how do we, what is the cost of reaching out to the people, both for the provider as well as the recipient? And the third will be the coverage. So how, because as you know, more and more people will now need digital financial services, more so micro loans and micro insurance for livelihood support, for running their small businesses and risk-proofing their businesses through interest. So in terms of product, we need to cover more. In terms of number of people, more and more number of people will need financial support, low-cost, low-ticket loans in a convenient manner because they are facing terrible problem in terms of income loss. So how do we increase that coverage both in terms of product and process? And finally, the other aspect will be the confidence of both the system provider as well as the beneficiaries of this digital financial inclusion architecture, both in terms of their awareness that what products are available and whether they are safe and whether their interests are protected, whether they're safe and secure. I think these 4 parameters have to be kept to evaluate what is happening in digital financial inclusion: the convenience, cost, coverage, and I would add confidence. I think, and for that, I think one can build what I call a digital financial inclusion index, which will probably capture all this. There have been quite a few work by different agencies to develop this. I will not go into that detail, but one will be we connect with these 4 elements and build up this digital financial inclusion. That will make the assessment. What is the outcome of all these initiatives of digital financial inclusion? Not so much as the process. I think as we go along, probably we'll discuss the other related points.
Yes, thank you, sir. That is excellent, sir. I mean, you've talked about the 4 C's, which constitutes a digital financial inclusion. That's so important for a vast country like India. So, ladies and gentlemen, Mr. Khan has come out with this concept of 4 C's: convenience, cost, coverage, confidence. I think all the 4 which he has said, if we are able to keep this in mind whenever we kind of design new innovations in the space of digital financial inclusion, these 4 have to be kept in mind. And I think that is something that truly will make it these platforms much more accessible to the population who are otherwise underserved. So the digital financial inclusion isn't it's not about payment innovation. What are the opportunities to improve the delivery of other digital financial services to the poor and underserved people?
No, so far the focus has been on the payment side of digital
Yes.
financial inclusion, and quite a few things have happened. In some areas, India has been in the pioneer in the forefront. The example which is being often quoted is UPI. In fact,
Yes.
we are a pioneer, and we are talking about taking it to the global scale, and a lot of global interest, international
Yes.
interest in this particular product. So we
Yeah.
have been forefront of that. A lot of payment innovations, a lot of startups and fintechs are also in that space. But as I mentioned, the post-pandemic situation warrants us to we go beyond this payment innovations to something which will touch the lives of people, the livelihood of people, their economic activities, and their contribution to the economic growth. You know, this is one of my favorite themes over the years I have talked about. So financial inclusion is not a charity. It is something, it is a win-win for all. And if you bring these marginalized people to the mainstream, they contribute to the output, and their savings, their investments also come to the mainstream pool. So each one of us benefits from the other. So I think mainstreaming the marginalized, the people who are in the dark pool, what some people has called, because if you people are over the years have been transacting in cash, and cash is a dark side of all our transactions. I'm not for a moment telling that you are totally going towards a cashless society. What I'm trying to say that less cash, and the cash has been something which is sort of a dark pool, and that doesn't give us any data footprints on which we can build other products beyond payments. So, for example, we have a tremendous opportunities of digital lending, microcredit in a digital manner, because as I mentioned, because digital has the advantage of cost, convenience, confidence, and coverage, and to that I will add convergence in terms of seamless moving from omni channel. So what you can do, you have now, if you have a data footprints, and what I call, if you are moving from cash to digital, it is something like what we have been taught in our younger days, Ashotoma, Sadmaya, Tamoshoma, Jyotirgamaya, from unreal to real, from darkness to light, the light of data, from the darkness of cash to the light of data. If we move, the data pool will provide, data can be both structured and unstructured. But people, particularly you are serving in the DFI space, not many unstructured alternate data is available. We have to build that. But there are still data, so you can use that data. You can use AI, you can use machine learning to develop products and processes which will facilitate digital lending. For example, small ticket up to a small size, it can be totally automated. Beyond that, it has to be physical. You have to have a digital component and physical component, which is rather difficult in the current situation. But there are ways of overcoming that. Similarly, you have something called micro insurance, which is the need of the hour. Both your livelihood insurance, your health insurance, the whole host of things have to be produced. So the digital footprints will provide that, both in terms of capturing your requirement as well as delivering, as well as monitoring, collecting premium. Third is, which is very important, of course, everyone is talking about that, which is very important. This digital platform will provide what is very efficient and seamless way of pushing direct benefit transfer. I think there is a big debate going on, and going forward, that is probably is going to happen, is universal basic income. In fact, before the pandemic started, we have seen how things are, automation is taking many jobs, and the growth scenario will not be as rosy as what we have seen. So I think there has to be some social security measure for people who are left out of this economic development, and UBI has to be pushed. So you need a digital pipeline efficient for pushing both credit, digital credit as well as digital debit. So this itself is also a big opportunity in terms of digital financial inclusion. And the other area which comes to my mind quickly is mass market advisory services. For example, there's a mutual fund or pension fund I think we don't have a social security. So how do you push that social security or some low-ticket investment products for people? Why they should be deprived? The penetration of capital market, retail for the disadvantaged people, pension penetration, insurance penetration low. So I think digital financial inclusion provides the gateway to get into those areas which are the critical needs of the world.
Yeah.
And they have assumed criticality post-pandemic.
Absolutely, sir. So while you did talk about these opportunities existing, one of the also the opportunities that exist, which we did discuss yesterday, was the opportunity of creating infrastructure in the in this vast country of ours. I mean, such a lot of infrastructure opportunities are also possible for the digital financial inclusion, isn't it, sir?
Yeah, infrastructure is one pillar. In fact, if you want, I put it always in terms of alphabets. If you say digital, I would say there are 7 pillars for building digital financial inclusion. One is, of course, your the first of the lot is infrastructure, and there, of course, we get into innovation, we get into incentives, we get to insurance, we get to information, we get into insights. So the first block is infrastructure. How do we create infrastructure for this digital infrastructure? In fact, digital infrastructure is a sort of a public good. Just like getting water, electricity is a fundamental right. Similarly, having a good quality connectivity is, I would say, is now becoming new requirement of a new directive principles of state, or a fundamental right of a human in this digital ecosystem. And if you see, a lot of things have happened, but the entire thing hinges around connectivity. And if you see the speed and scale of connectivity, we are talking about 5G, but even 4G, 3G, there are issues. And we need to focus on this connectivity. And the many studies have indicated, I think large number of people, we are the second largest internet users in the world, I think after China. But if you see the quality of our internet, there is a lot of regional variation. For example, Delhi has 65 to 70% people covered, whereas states like my state like Orissa, Bengal, and Bihar, less than 35% people have got internet connectivity. And if you see the internet quality, there are different studies, whether digital quality of life index or in this internet speed test and all that. There we rank rather low, and we in fact in this digital quality life index we are 79 out of 85 countries, and in the speed test we are 128. We are 128th among the countries in the broadband, and in fact we are behind Sri Lanka and unfortunately behind Pakistan. So I would say that these are, and we had an ambitious program of optic fiber and BharatNet. We started, in between it got halted, and again it has started. I think this has to be focused. And other infrastructure, I would say that central KYC infrastructure has to be built very robust manner and a very responsive manner, so that the entire that is available to all the players in a seamless manner. So that will greatly facilitate. So we need physical infrastructure like electricity and internet, and of course there is the issue of institutional infrastructure. I will not get into that, but just to focus on one area is how do we improve the telecom and internet connectivity, and I think that is very, very critical.
Yes, absolutely. Yeah. So, ladies and gentlemen, as you see, we are privileged to have Mr. Khan with us today and talk about the digital financial inclusion platform. He has been instrumental in the RBI pushing this agenda. So he has also requested me that he has to participate as a jury in another show. So I will be winding up this a little earlier than 7 o'clock. So please start putting in your questions right away, so that we are in a position to kind of take it across to him as soon as possible, and so that our interaction and dialogue with Mr. Khan goes well and is fruitful to everybody. So while we are talking about interaction, sir, we have a query coming to you from none other than Padmanabhan, sir, ex-RBI. So his question is, in our digital journey, are we not getting it terribly wrong in intervening in cost aspects too soon before availability has so that's his first. Future cost intervention can impact investments in digital platform and innovations. Do you agree?
Absolutely, absolutely. I think Padmanabhan should give the answer also. So no, absolutely, I agree. I agree, and because the viability has to be maintained. So no, in this country, for people don't mind paying 10 rupees for a half cup for a cutting chai, but but for paying for the services, people think everything should become free. So I think when I talked about cost, I didn't mean that it should be zero cost. So it has to be a win-win for both the people who are investing in acceptance infrastructure. And then there are ways of doing it. As I said, it's a public good, and particularly for the marginalized people. So the state has to intervene and subsidize, not the people who are making investments. So they can't obviously make investment. That's why we have, in fact, the Nilekani committee, on which I was a part of that, deepening digital payments, which was set up by Reserve Bank. We had talked about acceptance infrastructure fund. In fact, this was there earlier also. And RBI has come with this payment infrastructure development fund. So they will now use, I think, the 250 crore they are putting, and they're getting something from network providers, and they're providing something from getting something from the issuer. And they will move to the tier 1 to tier 6 centers to subsidize the acceptance infrastructure. So that will also reduce the cost. So I am absolutely, I agree. So both the profitability and sustainability has to be kept in view. But at the same time, the people who are first time getting into that, we have to incentivize them in terms of so many other things, including affordability. Yeah. But sustainability certainly is a point. It has to be kept in view. Absolutely no dispute on that. Yeah.
Okay. So we did touch upon the infrastructure, and so there's a query just come from Twitter. It says, "Sir, do we have enough of touch points across our villages and remote areas, such that people can walk a few maybe a couple of kilometers and get an avail of these kind of services? Do we have those kind of touch points, or is it enough, or we need much more with this?"
Well, actually, one example which comes to my mind quickly, in fact, is that business correspondent network. Yes. And in fact, we have been suggesting that in the digital financial inclusion context, those BC points BCs should become digital assistants. And we have a host of other products available, like Aadhaar enabled payment system, Aadhaar breach and available. And now people are using tablets, and there are small devices available which can be attached to the mobile phone and which can be used by the business correspondent. And the one model probably which we can work, we have a serious problem in terms of getting all this, because there is a digital divide in the sense the fellows who have smartphone, the fellows who don't have smartphone. So this is the haves and have-nots. So how do you bridge the gap? So if the BC has the BC agent has a smartphone, and whether we can have a multiple UPI logged onto that smartphone, this is something some people have pleaded in terms of technology. I think this can be cracked. So these touch points, and there are kiosks. Kiosks can be, in fact, there can be physical. These are the physical points where you can both use the brick and mortar and click and mouse sort of combination. But in the current context, when people don't want to go, I think more and more we have to depend on your own mobile phones. And there, as I mentioned, the BCs at BC point with safe social distancing, safe distancing, you are using your somebody is assisting you with all precautions. So those touch points can be used. And I think we have, I think 5 to 6 lakh or so touch points in terms of BCs. And we have customer service centers. They are also there. But I would say that what probably will do, maybe if you want to leapfrog to another phase, is using a mobile phone. And there comes whether we can cut down the cost of smartphone. How do we cut down the, or we bring more and more feature, more products and processes on the feature phones and standard feature phones. I think that is a challenge. I think some people have already started working on that. I think there is a work going on UPI on feature phone. I think voice-based, SMS-based. I think that also will so almost everyone has a mobile phone. So if you want to depend on smartphone, take the BC network, and we work further on improving the offerings through feature phones.
Right, sir. So in this COVID period, one of the most talked about subject is the MSME. And so besides the household inclusion, MSME inclusion is a critical part of the financial inclusion program. How can we ensure that the MSME sector, which has absolutely been devastated by this COVID, remains part of India's inclusive recovery and resilience agenda?
No, in fact, even before pandemic came into existence, we have seen a huge awareness that large part of the SME, particularly micro enterprises, are financially excluded, and 15 to 20% of them are got access to formal financial system, and many of them don't get sufficient funds and right time. So that has been the problem before even the pandemic. Pandemic has now brought further challenges, because many of them businesses has gone down under because of production as well as demand related issues. So they are facing serious issues. So I think what initiatives were being taken for digital lending for MSMEs, that they have to be accelerated. So one good thing has happened, that we had GST data, which can be used for looking at the cash flow. And we have the model of cash flow based lending. Your turnover, 1/5 or 1/4 of turnover is lending, so that becomes easy. So the problem is that you have 70-80 million of micro and small SME enterprises. 10 to 12 million, I think, are only GST. So what happened to the remaining 80%, 85% who are not part of GST? So for that, again, we have to go back to what I said, Ashotoma Satmaya Tamashoma Jyotirgamaya. So you create the data pool for them. So datafication has to happen with them. So that data, both structured and unstructured data, and you have to have a combination with AI, machine learning, and have to create models. And we have now models, plenty of models available, whether it is P2P, whether it is now we have digital only NBFCs, we have P2P, we have aggregation model. So we have, and in fact in P2P, because there is a limitation that you can't have more than 50,000 crore from the system, from P2P system, I think we need a separate add-on P2P for the MSME. So there are separate set of investors and there are separate set of borrowers. So I think you need a slightly different version of P2P for MSME segment. So one is this, and other, as I said, this creating the data pool for and using AI and machine learning and taking all the structured and unstructured data, alternate data to build models so this will be both for sanction, disbursement, monitoring, collection, the whole host of things can happen. In fact, here I would say, not only here, in all other areas, if there is a digital lending by anybody, maybe a bank, they should get some markup in terms of priority sector lending requirement. So I think that will also incentivize them to innovate and look at lending them in a digital manner.
Excellent, sir. I think very, very important information that you're given, especially for the MSME, which are like struggling in this pandemic. So a question has come to you, coming from anonymous person, not named. So he says that how can we encourage bankers to finance, typically street vendors, vegetable vendors, much more. Many of the loans could be like self-liquidating. If recovery or self-liquidation loans like OD or cash credit is there, then the cost of such loans could be very low. In addition, savings and insurance could also be simultaneously become part of this. But time and again, all our efforts are on to lend using technology. The recoveries are a bit difficult. What could be done?
No, technology is an enabler. So technology is not something which will not overnight change the social behavior. So I think when we talked about technology, we should be understanding the limitations of technology. In fact, there is a dimension of ethics to use of technology also. So let us not get into that. Maybe you can have a dialogue with Sri on this, with country with so many people who are so religious and spiritually oriented. But when it comes to repaying their bank loan, they forget everything. So I think why it happens. So and people are all go gaga once we see a Swamiji, but when they comes to meeting their obligations to their lender, and who in turn has to pay back to the depositor, all our spirituality ethics goes to the back burner. I think that's a different issue. But coming to the straight vendor issue specifically, in fact, we had a program called something many years ago, SEPUP, as the urban poor, lending to the urban poor. And that scheme was called SEPUP. So the fellow morning he takes 100 rupees and goes to the 500 rupees. He's go to the wholesale vegetable market, brings. In fact, he takes 450 rupees and the evening he returns 500 rupees. So that's the way it works. So this has been something which bankers, I think I have always championing the cause of banks and public sector banks, but I believe banks have not really focused on this. So they have to use some fintechs to see that how we can integrate this to their digital lending ecosystem. And there are many third-party products and cross products can be used for this. And you can build up a model on this. This will work. And as I mentioned, everyone has a mobile phone. You use it if you are not physically contacting. So you can use it. In fact, you finance a smartphone to him also, so that it becomes easy for him. And I think this could be a good proposition. Unfortunately, what has happened, many bankers, only when there is a diktat, is a priority sector lending, you lend. Mudra loan, you lend. Otherwise, out of box thinking and going, because one has to now focus. Your corporate portfolio has mostly gone now. And they are not going, it's going to take time to revive. And secondly, large, big corporates are going to the bond market. So you have to handle these MSMEs, agriculture, and the bottom of the pyramid customers in a very profitable manner. So you have to think of, now technology is available. You create a data pool, build models, test it, use fintechs. If you don't have the system, you can create your independent platform, or you use the platform which can be developed in partnership with the fintech, and we can access. It is not a big deal so far as technology is concerned. It's question of willingness to take to that sort of a plunge. I think there is already, government has talked about lending to street vendors. I think they just go beyond government program or RBI diktat. I think there's a vast opportunities available to serve the bottom of the pyramid customers, and just at the pyramid customer, and just above the pyramid customers. So that is the source. In fact, they are the small customers. They constitute a big market. So you please focus on those markets, and there are ways and means, and technology provides you that means to capture those markets.
Great, thank you. So in India, the digital financial inclusion of agriculture, so that's one of the most important things, is critical as it is the mainstay of the economy, agriculture. So agriculture is a source of around 15% of GDP, 11 to 12% of exports, livelihood of about 50% of the Indian population, rough numbers. What are your recommendations to ensure small and marginal farmers are within the ambit of digital financial inclusion?
In fact, this is something very close to my heart, and I can talk for quite some time on this. But to be precise, I would say we talked about fourth industrial revolution, but I think we should also talk of fast digital revolution for the agriculture. In fact, there are bits and pieces of technological revolution which is happening in agriculture. So when you talk about digital financial inclusion in agriculture, I would say just don't look at the finance component, because finance is certainly a lead resource, but it is not the only resource for agriculture development, whether it is particularly for small and marginal farmers. So I have a framework, what I call farmer framework. So finance comes on the top of it.
Yeah.
So digitally, how you do it, and there are many ways of dealing finance in the digital, but you have to create a total digital ecosystem for the agriculture, digital and technological industry. So the finance is one. You have allied activities which provides a backup to your crop activities, which is quite risky often. So allied activity, the dairy, poultry, and all that. And there is a lot of intersection with technology and digital in terms of input procurement, in terms of marketing. So there you need to have a lot of digital quotient. Risk mitigation is what is so risk mitigation insurance is, for example, now what a lot of technology is happening in terms of drone going and seeing what is happening in your field. So how do we integrate that technology into this, and marketing support? M is for marketing. So now we're talking about ENAM, and how do we create that marketing support digitally, connect the whole country? And E is extension, is research support and going. We had, how do we provide through mobile the crop advisories, the weather advisory, the price advisories, and the last one is the resources other than finance. So for example, whether your seeds, whether your pesticides. So there is now a whole host of models which have now come for this backward and forward linkages, including involving technology. So I think you have to create the digital ecosystem for the agriculture. Both there are now agri-techs and they are working in this field. So we have to create a digital ecosystem, and in that digital finance is a part of that overall digital ecosystem for the agriculture that will make much more sustainable. For example, you give money and they produce. If they can't sell, if they can't mitigate the risk, so I think it just goes waste. So in fact, sometimes more you produce, more risk you are exposed to. So I think you have to create this holistic digital ecosystem for that, and particularly for small and marginal farmers. What we look at is this farmer producer organization. Because to reap the scale of scale benefit, so how do we digitize the whole process of farmer producer organization? Similarly, how do we bring this joint liabilities group, which is mainly for the small and marginal farmers, to this digital ecosystem? I think this has to be looked at in a very holistic manner. And if you do that, again, I have a complaint against, though I don't want to say, again, I have a complaint against government agencies and the bankers. If you go to a state level bankers committee, they will only talk how much credit you have given, how much credit you have given, how much credit you have given, not looking at the rest of farmer. What is the allied activities? What is the risk mitigation? What is the marketing? What is the extension? And whether their people are getting quality sheets or not. So I think the digital intervention can bring a lot of transformation into the agricultural system. I think that will make it sustainable, more so for small and marginal. So look at holistic.
So a query has come your way from Mr. Pushpendra Khandelwal. He says, There are two things that are important for FI, digital FI. One is a smartphone and the internet connection. He says, looking at the economic conditions of this segment of society, how do you expect the effective implementation of digital FI is possible, and will that be possible? And how many years will it take to be effective to see the results? Your thoughts?
I think I did briefly mention about low-cost smartphone. How do we promote that, and whether banks should finance, and whether we can build some model. There is a community smartphone which started many years ago in Bangladesh when the first cell phone comes. One person in a group has a phone and others use it. Whether we can have a community smartphone which can be used, or a smartphone is with the VC agent, and whether you can use build products. And the other is to create features around feature phones so that it is more compatible for most people have feature phones in the rural area. And the other is, as I mentioned, about scaling up the BharatNet fiber optic thing. As I mentioned, this is a public good. It has to be. We have to make investment. We started in between. We faltered again. We have started. I think this should have been completed some few years ago. But nevertheless, now it has started and it should be completed. So we provide that. These are all digital infrastructure, public good. So you provide that so that will cut down the cost for digital transactions. So it will add to, as I mentioned, to both cost and convenience and coverage. I think we need to focus telecom. There are many areas even now, Northeast and all, the telecom infrastructure is still bad. So how do we focus those areas? We have a telecom sector. There is a fund available, a universal fund available for using. I think you should use those funds to expand this infrastructure. Again, this will be part of what I call digital financial inclusion index. So you have area-wise, you map whether these infrastructures are there or not there. If not there, how do bridge those infrastructural gaps? I think that has to be done in a systematic manner.
Right, sir. So a query coming from your wave from Subhash Kalia. He says, sir, do you believe that alliances with fintechs can really be a game changer to achieve the goal of digital financial inclusion going forward? How in a country like India can achieve such a huge task?
I think now this is well accepted that this collaboration will work. The fintech have the agility, the fintech have the capability to innovate. I think partnership has to be there. Only thing that you have to see that the risks are mitigated. One is, of course, risk of outsourcing, and the other risk is in terms of transparency and how you build a scalable model. So that partnerships can work if you look at these areas. In fact, they can be very useful. For example, both in terms of areas of payments, in the areas of alternate lending, and for example, areas of blockchain and cryptos. Each has a benefit in terms of expanding financial inclusion in a digital means. The only problem sometimes many fintechs are focused on the top 100 million. They are not so much focused on the bottom of the pyramid customers, who are the focus areas of DFI. I think we have to bring them there. The other part, there are sometimes certain risks involved in giving unbridled, what should I say, power or unbridled access to fintechs to capture the market in terms of, we have seen many examples just to capture market, how sometimes you tend to forget there is something called fair practice. Now there are complaints that there are fintechs who are lending, but people don't know who is the bank or NBFC behind that. And once there is a problem, people don't know whom to approach. I think I think RBI has come out with something that they have to, and people don't know what are the terms and conditions. So there is the need for responsible lending here. So there also, I think banks have to play a role of see that innovations and addressing risk, they have to go together. But certainly, partnership is the need of the hour, and how best we leverage that, I think that will also in a big way determine how meaningfully we are progressing on the path of DeFi.
So one of the big thing that happened in the post the pandemic is the migration of millions of migrants. So digital infrastructure. Second, to improve digital financial. What are your thoughts, sir? How can we achieve this?
Can you repeat? I missed this. Please repeat the question.
So this So in March, after the housing post, around 400 million migrant workers fled cities en masse, and in the absence of any social or financial state, doesn't this incident highlight the need to ramp up physical and digital infrastructure and improve digital financial literacy? Two important aspects for digital financial inclusion.
No, absolutely.
How can we achieve this?
Then absolutely, migration has become a big issue now, and this pandemic has shown that how critical it is. In fact, one area which financial inclusion we have been working for quite some time is remittances. So how to smoothen the remittances, both for the internal migrants and cross-border migrants. So for the internal migrants, so there are a whole host of products have come and all that, so that has to continue. So what this pandemic has shown, that first of all, again I come back to what I told about agriculture. You need to create a little holistic ecosystem. There is no database of the migrants. So now people are waking up. What is the database of migrants? So you create a database that itself will give him some data point for that person. So first is creating a digital database for those migrants, capturing what are their income levels and all that. Again, give them the data pool, create the digital footprints for them, and so that you, like any other informal sector, those who are wedded to cash, give them move to more formal and digital world, so they have the data, and the data is the new oil, and which can be used like any other informal sector fellow. He has a data to back up, so you can build products around that. I think so. They have to get into this datafication in a big way, so that governments can push the DBT, banks and financial institutions can build products around that. And the other thing is, this database will also help in housing. In most urban areas, one problem migrants face is housing. So how do you create this database which can be linked to some housing finance for them and housing arrangement for them, micro housing loans are there. The other important point for the migrant people is how do we, because their addresses are, they keep on moving from place to place and all that. So how do we really leverage that central KYC? And in fact, on the central KYC, I have a thought that what was being talked about many years ago, account portability, but that's slightly different. But if you have a central KYC and his data is sitting in a central KYC, which is possible now, if it is made smooth, I think a lot of products and processes will be easy for digital financial inclusion of migrant labor. The other point, the last point to my mind that comes to my mind is this again, how do we further smoothen the remittance for the sender as well as this recipient of the remittance? More often than not, it is a housewife. So how, because there is a lot of gender bias in terms of digital financial. And here comes the digital financial literacy, both for the sender of the remittance as well as the recipient of the remittance. So I think that also needs to be looked at. Similarly, for the cross-border migrants, there are the huge requirement of digital literacy and foreign exchange literacy. I think that is also, I think that focus we have not really, in fact, educated people, for many educated people, foreign exchange is foreign. So forget about think of what will happen to the low income, low skill fellow who is going to Middle East and other countries. So I think literacy is very, very critical.
Yeah, thank you, sir. So actually, we have covered the out of the 4 pillars you talked about. The convenience we have covered in some way, cost and coverage, something you have covered out. The last pillar is the confidence, and when it comes to confidence, the question that comes to my mind is that the rapid and abrupt shift towards digital financial services poses potential risks pertaining to cyber attacks, which is the talk of the town. Digital fraud, state surveillance, etc. What measures do you propose to deal with these risks such that the confidence of the customer or the people in general are not shaken?
Yeah, this is very important because this has been one of my great things, that if people who are the first generation entrance to financial inclusion, more so to digital financial inclusion, if some fraud happens, if somebody's 500 rupees is gone because of fraud, 1,000 rupees is gone because of fraud, for me and you, it doesn't matter. But a small fellow, if he loses 500,000 rupees, he is again go back to cash. He'll go back to cash. So I think it's very, very important to maintain his trust and confidence in the system, what I call insurance. You should provide. So how do you provide that? One is, of course, massive campaign for digital literacy, do's and don'ts, what all products you use and all that. This is, the fraudsters are always many steps ahead of people who do the policing or people who do the regulation. So I think how do we educate people? One is, and in the back end, there are now lots of analytics can be built to see what are the unusual patterns which are happening and how do you look at that constantly. And so it has to be institution level. It has to be at the national level also. So national level, I think we have been talking about a FinSat, SAT for the financial sector. I think that should come as early as possible because we have been talking about it for quite some time. And the other part is of course, as I mentioned, not only cyber attacks and cyber frauds, but as I mentioned, it is responsible lending. People should not get into the trap of over-indebtedness. We have examples. For example, 10 years ago we had in Andhra, and recently we had in Assam. So from Andhra to Assam, there are examples of people getting over-indebted. And that risk is more if you have an instant credit because of digital means. You run the algorithm and go on pushing the credit, and people are happy to lap up the credit, but if they don't have capacity to pay. So how do you handle that in a prudent manner? So protection becomes important. So that becomes a responsibility of the regulator. And of course, there are self-regulating organizations for both banks and NBFCs and MFIs. I think they are responsible to see that customers' interest is protected. Fair practices are really practiced in letter and spirit, so that people are aware what are the risks of over-indebtedness. So I think both from cyber attack point of view and from the point of view of responsible delivery of financial services, I think we have to take extra care to see that fast generation entrance to the digital financial inclusion space, they don't lose trust and confidence.
Right, sir. So an observation has come from Mr. Kaza, Prabhakar Kaza from London. He says the Financial Inclusion Commission estimates that 2 million adults will not have bank accounts in UK. That is 5% of the adult population. So I guess only those who need bank accounts will open. Government should create conditions in which the person has the need to open an account and not forcing everyone to open an account in the name of financial inclusion. According to him, it is futile. Just one line thought we have.
No, and nice to get in touch with Mr. Kaza. I met him many years ago in London. And he is a brother, a very close colleague of ours into the bank. So, this debate is there in many places, whether a bank account. But I believe As I said, internet is your internet access is your birthright. Similarly, I believe having a bank account is a fundamental right. So I think let us have
Yes.
it. And people who don't want to have it, they can have the choice. But again, it's a question of education. It's important. So I think we have to educate people. And there are ways, for example, there are models around these PPIs and all that. Without bank account you can do it, but the point is, if you have a bank account, that gives an extra advantage of getting products around your digital footprints.
Right.
And of course facilitates transactions, government pushing it, DBT, universal basic income, which may come some years from now. So there are many advantages. So while you can choose not to have a bank account, but I think people should be educated about the benefit of bank account, and I think that is something which is a fundamental right, as I said, and I think that should be promoted. Yeah. In fact, we have in India we have focused on that. Jam Trinity. You have Jandan account and mobile phone and other. So that gives you the whole suite of the foundation on which you can build a superstructure of financial inclusion. Yeah.
Absolutely. So before I let you go, it's almost getting 7. Would you recommend any policy interventions for streamlining digital financial inclusion, sir?
There could be many. In fact,
yeah, maybe 1 or 2.
Dil mange more.
Yeah.
Quite a few things. Let me be very honest. I left Reserve Bank in 2016. Quite a few things have happened in terms of this area. In fact, other regulators also have played, whether it is SEBI or IDA, in these areas. Quite a few things, and government also have been in the forefront of pushing for them.
Yes.
I would put it in terms of what I call 5 P's.
Yeah.
So one is when I talk about regulator, I will include government also. So public authorities. So one is promotion. How do we promote? So what do we promote? You promote, as I mentioned, whether digital lending can be, for example, a part of priority sector lending. You can give them some higher weightage. Other is we talked about infrastructure, both digital and physical. How do they promote? BharatNet is what we talked about. The other thing is how do we make available cheaper cost smartphones? And now we are talking about new umbrella entity. So how we really make them interoperable, and how do you make it see that they are focused on the financially excluded people, and how do we make this payment infrastructure development for very, very effective and meaningful. And also, as more and more innovations are happening and it is exponentially growing, create standards and technical specifications. I think we need somebody to create those standards and technical specifications. That will be a lasting contribution for in terms of promotion of digital financial inclusion. And the second is protection. We mentioned, and I just quickly finish. I mentioned about protection of the consumer, protection of the customers, and the data protection becomes very important. We talked about trust and confidence. So now a lot of data is being captured by people who are providing service, but we must provide some boundaries within which the data has to be used. You are some amount of cross-selling is okay, but beyond that we are going. I think the privacy data protection bill is something which I am looking at. And the other things which I will not elaborate is popularization in terms of financial literacy. And very important part is the prudence in terms of responsible lending. As I mentioned, 1 minute lending has the risk, so we have to look. And the final point which Mr. Padmanabhan raised is profitability. So we have to get a fix around what is going to happen, the pricing and MDR. I think that call we have to take, and we have to fix, and how much government should subsidize, how much consumer has to pay, who should cross-subsidize. I think this debate has to be taken to its logical end. So I think all these 5 P's are important. Yeah. Thank you.
Yes, thank you. So ladies and gentlemen, we have come to the conclusion of today's show. Mr. Khan has unfortunately to go for another the show, is a part of the jury. So I promised him that we will close by 7. In fact, we have already gone ahead by a minute or two. So please join me in thanking Mr. Khan for coming over and discussing with us. We talked about digital financial inclusions, and we covered the 4 pillars that will make the digital financial inclusions a vibrant model in India: convenience, cost, coverage, confidence. So with these thoughts, let's join and thank Mr. Khan. Sir, thank you very much for coming and talking to us. It's been a privilege to have you had here today.
Thank you. Thank you.
Thank you very much, sir. Good evening to you. Ladies and gentlemen, tomorrow we have Mr. Samir Paranjpe, partner and leader, Grant Thornton India Limited. The topic is protecting banking with forensics. And as you know, we are approaching the 100th episode of Business and Banking Dialogue, which is on coming Monday. And some of the people, some of the subject matter experts who would be there, this is going to be a very different show than what we have regularly. That's right in front of you. They are stalwarts, banking stalwarts. They are subject matter experts in their own rights. And we will be talking, like Mr. Khan said, the new thing of the new policy of NUV. We will talk about on that policy, and look forward to having you all on. That's on Monday. Tomorrow, look forward to seeing you all. With that, thank you. Good evening and goodbye.